All right, ladies and gentlemen, we are going to dive into Airbnb. As you all know, I do like this stock. I like it at a good price. And this once again is a price target that I've had on the company for over a year. Didn't get close. It did hit 80. It actually did hit $80. Trying to get it between $65 to about $75 on the high end. I'm going to go over exactly what I don't like about the stock. So let's get right into it. Now, as you can see, Airbnb was down over actually 10% on the day, starting to rebound because CEO was on CNBC and gave some optimism. Forward guidance on the stock is definitely what's in question and what is causing it to sell off. But trust me, this is a very expensive stock, $72 billion market cap on a company that's doing right around $8 billion in revenue. Let's talk about some things here. Now, here's what I want to point out when you guys run your evaluations. I've talked about it with a lot of growth companies here. When you go down and you hear experts giving ridiculous growth expectations, tamper those expectations down drastically, okay? So over the next 5 years, they're projected to do 89% growth, which is astronomical. Next year, they're projected to do 21% growth, which I think is doable in a strong economy. Are we in a strong economy? We are right now. The consumer is strong, but I do think there's going to be a pullback, and Airbnb made that clear. Take a look at the growth rates I'm using, ladies and gentlemen. 25% for 3 years, not 80%, 25%. Then 18%, then 10%. To maintain double-digit growth for that long is very, very hard with no speed bumps in the way. Let's talk about the current quarter and some of the questions I have here. So top-line revenue did grow roughly 20%, going from $1.5 billion of revenue to $1.8 billion of revenue. For me, guys, with this valuation, I'm expecting better growth in this. And I think we're going to see a substantial pullback in this company, and we're going to get a good buying opportunity. Now, what I don't like what they're doing with the accounting side of things, take a look at this. Revenue came in at $1.8 billion. Net income is $117 million. So they were profitable here. But how is free cash flow coming in at $1.6 billion when we know free cash flow is really net income minus taxes and minus net operating capital? So if they have 117 of net income, how are they getting $1.6 billion of free cash flow? And this is what I don't like, ladies and gentlemen. Now, most of you familiar with my channel are probably going to piece together exactly what they're doing. We can see here net cash provided by operating activities is 1.587, and that's the $1.6 billion they're referring to. But let's take a look at the top here. $117 million of operating income. They're putting depreciation back in, and look at this. They're putting stock-based compensation back in. And the problem with this stock-based compensation is this stock-based compensation is actually more than their EBITDA. Okay, so this is why I also use the EBITDA metric, because if we're just looking at free cash flow, you're thinking that these margins are ridiculous, and you're thinking that this company is just printing money, and that's truly not the case here. They're adding back in a lot of line items here to make it look like the free cash flow is extremely strong when they are pretty much just profitable. When you're looking over these things, I want you to understand that sometimes there's accounting things taking place that is really deceiving the investor. Because if you were just looking at the promotional material here, you would say, oh my God, they did $1.8 million in revenue and they're doing they did $1.8 billion in revenue and they're doing $1.6 billion in free cash flow. But if you look at what their net income is, how did they get to $1.6 billion, right? And we can see here that the EBITDA was $262 million. And so we're going to stay focused on EBITDA with this company. because EBITDA is earnings before interest, taxes, depreciation, amortization. And so we can get a better understanding of what we can pay for a multiple on EBITDA. All right. So that's what I want you guys to stay focused on. Let's not pay attention to the free cash flow because they're playing free cash flow games. And let's go to a proxy of what free cash flow can be. And that's going to be EBITDA. I'm looking for a 13% rate of return, so I want to buy the stock below $75. Now, they are not diluting shareholders because what they are doing is they are buying back stock. So they're doing this interesting thing where they're doing stock-based compensation, but they're also buying back stock. So the actual outstanding shares is actually not being diluted, which is pretty good overall. So we want to stay focused on what we can control and not necessarily the gimmicky things that they're doing with the accounting side of things. So that's why we're staying focused on EBITDA. And so when I push them out to 2030, I do get a $173 price target on Airbnb if they can maintain these growth rates. And what are we looking at? We're looking at enterprise value times EBITDA, and where am I getting 22 multiple? And so when we go to the trailing 12 month of EV to EBITDA, we can see here it's trading at 37 times enterprise value to EBITDA. The sector median is at 10. And when you look at your more prestigious hotels and resorts, they do trade around 20. So I did give it a small premium to those companies, basically meeting it in the middle and getting a 22 multiple. I think that's a fair valuation I'm putting on the stock, considering that the growth rate is probably going to remain elevated compared to its peers. And I do believe that the free cash flow will be stronger due to the overhead cost that it takes to run a hotel. So I tend to think their business model will generate more free cash flow than its peers. And also, I think it demands a higher premium because of the growth rate. And so that's how I arrive at this valuation. So I'm really not going to change anything with this stock. Yes, it had a significant dip, but it's not even close to where I need it to be for it to make sense to me. And so that's just how I'm running my valuations. You can agree with it or not. Let me know what you think about Airbnb. Obviously, I really do like the company, but I like it at the right price. It has to make sense in order for me to get a rate of return that I'm looking for. As always, ladies and gentlemen, appreciate your time. Thank you so much for spending it with me, and we will see you in the next one. Peace.